Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this week's Motor Trade Radio weekday special podcast. We're delighted, as always, every month that welcome back to the podcast Derren Martin, Director of Valuations at CAP HPI. He'll be joining us as normal to give us an update on how the values have performed over the course of October. So welcome back again to the podcast, Derren.
Thanks, Phil. Good to be back.
I know Curtis is having a few technical issues this morning, so we'll carry on without him. Hopefully, he can join us part way through once he's sorted his technical challenges out. So, I think, Derren, I think this interview is probably more valued than ever in terms of some of the context. So, we've obviously had a headline trade value at 3 years, 60,000 miles at down minus 4.2%, which is equivalent to approximately £850 downwards, which is the biggest monthly drop since the introduction of CAP Live back in 2012. Do you want to talk us through sort of how the month played out and some context behind that?
Yeah, sure. Yeah, it's actually the biggest movement. Yeah, since we introduced Live in 2012, you've got to go back to 2011 May, I think, for a movement this large in the market. We've obviously been seeing values dropping over the course of sort of since April time. So we've had over the July, August, and September values dropped by around 2% each month there, and then as we've gone into October, it started off sort of in a similar vein to that, but then the value movement's just increased, and we're basing our values off what we see in the sold data generally. We do also reference retail data, but it's important that to sort of say that the value movements that we're making are based off the data that we're seeing in the trade market. So there are vendors that are selling for obviously less, pretty much across the board actually. We're speaking to retailers, and context behind that is that retailers are not, the demand has dropped off fairly considerably for some. I think the necessity purchase is still there. Obviously in the used car market, that's a bit of a constant, but those aspirational purchases, cars that are sort of a higher value, are struggling by more. And I guess the vendors are selling the cars now, whereas in the past when the market started to drop, maybe they were hanging on to cars a little bit longer, hoping that there'd be a recovery. But I think the way they're seeing it at the moment, there isn't likely to be a recovery in the short term as we're entering that sort of seasonal drag. So values are dropping. You've got a bit of a double whammy of seasonality and then demand dropping through cost of living concerns, people getting mortgages that are coming to an end, fixed rate mortgages coming to an end, interest rates are high, looking at winter fuel bills, all of those sorts of things, all playing a part now into this sort of fairly major realignment in values.
And I mean, it's obviously the biggest, they say, in terms of that October into November movement. But through history, I mean, there's been some big movements, particularly in that financial crash period, wasn't there, when you start to look over a period of time, that you were seeing these kind of figures fairly consistently, weren't you, through that period?
Yeah, we've seen it before, but you've got to go back a long way to see those sorts of movements. There is no escaping. This is a large movement in the month. Since we introduced Live, we've only had a movement of over 3% on 3 occasions. So it is quite rare, and we've obviously gone for over 4% this time. So we've not seen this in the sort of the Live era, I guess, as we call it. Then you do have to go back to 2011, and then before that to 2008 for a movement this much. But the big caveat on it this time around is that values are high. Values went up in 2021. They were very stable in 2022. Some cars went up in value again in 2022. If you look at average values, are still around 18, 19, 20% above where they were in 2021 at the start of that year. So cars are still worth more than then. I think that's an important point, that the vendors selling cars now can afford to do it at slightly lower amounts because they put those cars on before, a lot of those cars on before those huge increases. So they're still worth a lot more than than their residual values that they were planning for.
And I mean, in terms of sectors and across the different, let's look at age bands first. I mean, where is the strength? I suspect everything is kind of gone down. We'll get onto that in terms of individual cars, but where's the strength and weakness in terms of age bands now this month?
Well, so 1 year, 10,000 miles has dropped by 3.6% in October. 3 years, 60 is that 4.2%. 5 years is 4.3%, and 10 years is 4.5%. So when you look at that in monetary terms, it's £850 at 3 years, £1,200 on average at 1 year, which is fairly significant. At those older ages, it's just over £500 at 5 years and £240 at 10 years. If there is any strength, it might be in that real bottom end, those really cheap cars, but they've got to be in the right condition. That's the retailers that we're speaking to. They're saying they are buying, but they're buying to replace a sold unit. They're not stocking up. I've not spoken to any dealer group that is stocking up at the moment. And condition has never been more important, really, because nobody wants to buy work when the market's falling. You don't want a car that's going to be sat in your stock whilst it goes over a book drop. Do you buy a car with an engine management light on that you're not quite sure what the problem is? Cosmetic damage. There's a shortage of technicians, which is widely publicised. No one's really buying work. So those NAMA graded sort of 1s and 2s are still selling at a price, but they're still selling. After that, it's really hard on those poorer condition cars, and we've seen at least a 10% drop off in conversion rates at auction. So there are plenty of cars that aren't selling, that are swilling around.
And I mean, in the editorial, you clearly point out that no vehicle sector was immune this month. Sometimes you get some sort of you might see an increase in some of the sectors compared to the average and things like that, but I think this time you said that no vehicle sector has been immune from this downward trajectory movement this month.
No, so the biggest sector is obviously SUV. That's dropped by 5%. So then you've got others that are dropping by just slightly under that, lower medium by 4.2. So you've got some big drops in the convertible and coupe cabriolet areas, 5.4 and 7%. And that is, that's a double whammy there of people not necessarily buying that sort of aspirational vehicle. If your mortgage is going up by a few £100s, are you going to go out and buy a car that for a bit of a sort of a toy or something like that? Probably not. So there's not a lot of strength in any of the sectors, unfortunately. It's across the board. We're seeing a sort of, as I say, a market realignment, which is generally affecting most vehicles. There's always areas that will do okay. Ones that stand out for me, I guess, are some cheaper electric vehicles like the Leaf and the Zoe. They've come down by so much in the last year that they now look really good value. And if you can get those in good condition, they are being snapped up, and we actually put those up by a couple of percent. So these movements that we make, we're talking averages, the movements that we make are down at individual model level, and there's lots of differences there. As I say, those cars have gone up in value, but then you've got the Mitsubishi ASX was the one that we dropped by the most in the last month. That's come down by over 13%, which at 3 years old is nearly £2,000. So you've got Skoda Karoq that's come down over 11%, which again is £2,000. Grandland X, similar. Jaguar F-Pace diesel by £2,600 at 3 years. So there's lots of moving parts within it, but there are some that have come down quite dramatically.
And Derren, turning to fuel type, what did you see across petrol, diesel and hybrids?
So petrol, diesel, hybrids, they all came down by similar amounts. They were around sort of the 4%. Petrol was 4.6%. Obviously, that's the biggest sector. There's lots of cars within that. I guess the electric vehicle sector is one that stands out because they dropped only by 2.4%. So it's been the second month in a row that's been the best performing fuel type. So roll back a few months and that would have been unheard of, because a lot of those dropped in value by a lot more over that time. So yeah, by fuel type, it is more or less across the board, but there's definitely pockets of strength in that electric vehicle sector.
And I mean, we so you talk about some of them big movements, but I mean, in terms of and you've mentioned you've talked through some of those standout sort of models in terms of performance, but you mentioned it earlier around auction performance, and every month you obviously poll the views of the auction houses across the sector. I mean, what were they telling you about the stock levels, demand? I mean, you mentioned their conversions being down. I mean, what was the general theme coming back to yourselves from the auction sector?
I think it's across the board in October that the situation worsened through the month for the auctions. As I said, the conversion rates dropped. Stock levels are okay, they're relatively high, but demand dropped off. I think there's still interest, there's still buyers. There's still people watching. Online and in the halls, but there's less people buying, and they're picking off vehicles. They're not buying in bulk. One of our good contacts calls it rifle shooting. They're picking off the odd vehicle rather than scatter bomb and buying a lot of vehicles for stock. So that's obviously affecting the auction world. So feedback is it's tough. Then by no means all doom and gloom. They are still selling, and then the volumes that we've seen are actually relatively high. We're still seeing more volume sold than last year, and by around 10-15%, but are at the same amount down from 2019. So there's less cars being sold than pre-COVID, but certainly more than last year. So cars are selling, they're just selling at a price. And as I say, it's the good stock that's selling. There are sort of more than one bidder for those good cars, but for the poorer condition vehicles, they're the ones that are really suffering.
And I mean, it's a question that probably since you announced the movements and everything else, and you've probably been, I mean, as ever, you've been busy every month throughout the pandemic and post-pandemic. But I suspect, since that announcement came out of the monthly movement, you've probably been very busy in terms of calls to discuss. But what's your view now on prices into November, and I'd say the rest of Q4, which very not long left now in Q4, but what's your view in terms of where you see these prices going? Because by the sounds of it is a realignment to the prices that are still very high compared to pre-pandemic levels.
Yeah, so I mean, this is quite a good time to do this call, because obviously we're a little bit further forward than past our deadline. And values are already dropping in our live product. So we've dropped values by over 1% already since we cut off for the last deadline. So values are continuing to drop. There's no reason to think that demand is going to improve this side of Christmas. So I don't want to be all doom and gloom scaremongering, but I can't see what is going to make demand improve. It tends to be a period of the last 2 months of the year are where demand drops off. People start to focus on festivities at Christmas, saving money for that. As I said before, winter fuel bills are a little bit of an unknown as well. Got mortgage issues and high interest rates. And you've got more cars coming back into the market. You've got supply getting back to not quite back to pre-COVID times from the manufacturers, but their lead times are down. More cars are being put into the fleet area. That generates more cars coming back into the used market. So supply is going up, demand is not going to go up. So I think we're in for some more value moves down. As I say, it's already started in our live product. I would encourage anyone to look at live rather than monthly, because those values will already be out of date. And yeah, I think there's more of the same. So will it be a 4% drop again? I wouldn't want to say that at the moment, but I think it will be there will be a drop this month of a fairly sizable drop. Same in December. Once you get into January, demand, in my opinion, will pick up. Consumers you come out of Christmas and you do start to look for that thing that maybe you've put on hold previously. So I think demand will improve. Will demand improve enough to make values go up? I have my doubts, because conversion rates at the moment are around, say 50%. those cars are still going to be swilling around in January. You're going to have new car registration activity at year end, which we maybe haven't had for a couple of years. Manufacturers will be putting cars maybe pre-reg. There will be some, again, activity in the fleet area, which will generate returns. So I think that you will get a smaller downward movement in January than we've experienced in Q4, but I don't think there will be an uptick quite yet. So I think that you might have to go further into next year for values to maybe improve slightly. So I think January will be okay. I would say to dealers that it will be okay in January with regards to demand. That might not mean that values go up.
Yeah, and I mean you hinted to a good point during that around one of the disconnects in the market is that the new volume is coming very quickly into the sector. It's being pushed into there, and there's a bit of a disconnect in there now between new and used, because new's very much incentivized and subvented finance that is now competing heavily against that used car market, which, to your point throughout, still remains high in terms of its value.
Yeah, if you're going out to buy a new car, there's plenty of sort of incentives and offers, and as I say, there'll be a bit of pre-reg. You go out to buy a used car, they're more expensive than the last time you probably bought a used car by, as I say, upwards of up to 20%. You've got high interest rates, so there's potential customers that are walking away and saying, I'm going to hang on to my car that I've got at the moment. But it will pick up, it will improve. We're just, as I say, it's a seasonal downturn, and there's other factors as well that are playing into this. But it's not all doom and gloom. It will. We tend to get caught up in the here and now, but it will improve in the new year. But I think up until that point, we are probably going to see values still continue to drop. But it's not a crash. By no means is it a crash. Cars are still selling. It's just it's what I would say is a relatively major realignment in values.
And just a final question, just conscious of time with yourself, that the new Tesla 3s had a price cut of 3,000, which took it under that 40,000 price bracket for the newly facelifted Tesla 3. That was midway through October. I mean, has that had a notable impact on used Tesla 3s yet, or do you think the used market is still fairly well priced considering the movement that it's had since sort of October of last year?
Yeah, I think the Model 3 is well priced. It has come down in October, but that's more down to the volume that's around out there. They look good value cars, and the used price is far enough away from that new price not to have it massively affected. So I think, Tesla get blamed for quite a lot of things, but maybe they have too many cars coming back at certain points in time that can cause it. But really, their pricing activity, certainly on the Model 3, is too far away from the used values. So, and I still think there's good opportunities. They remain aspirational cars. They remain desirable cars for dealers to buy and to turn quite quickly. They're the biggest, they're the quickest turning vehicles in the retail world. So there's they are. I don't think that announcement has made much of an impact, if I'm honest.
I mean, I say, Derren, we could go in. There's a lot to talk about, but I mean, ideally, for the listeners, there's a lot of detail in the editorial. There's a lot of detail in terms of the facts and figures that you put in there. So, as always, for anybody listening this morning, then do check out the cap-hpi.com website, and you'll find the editorial on there, or you can find it through any of the social channels, particularly on LinkedIn through Derren. And I think there's a webinar coming up next Tuesday as well, which is always well attended, which you do go into a little bit more deeper dive on the market as it is and what you're seeing in the data. I think that's next Tuesday, I believe, Derren.
Yeah, Tuesday at 2:00. It's a free webinar. We have a few hundred customers on that. So yeah, if you haven't had an invite to that and you want one, reach out to me on LinkedIn, drop us an email. Just reach out to us and come and join that. And we'll give a bit more detail on economic situation, the value movements that I kind of run through today, LCVs as well, and forecasts, which is quite important. One of the questions we're getting asked a lot about is what happens next.
Yeah, what's happening next? Yeah.
We haven't got enough to go through that now, but it's certainly not all doom and gloom for next year. Definitely.
It's a realignment. I think you're right. So, I mean, needless to say, Thanks for the time. Thanks for the update. Thanks for the chat. As always, Derren, it's much appreciated. Have a great evening at the FN 50, and we will catch up again soon as normal. And that's it for now from Curtis and I. And I say Curtis, hopefully his systems will be up and running by the time we get to do the Saturday headlines. So please return to us for this weekend for the Saturday headlines as normal. And thanks again for joining us, Derren.
Yeah, cheers, bye.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, and on your podcast feed. In the meantime, if you'd like to get in touch with Philip and Curtis, come on the show or send a press release, then email them at motortraderadio@yahoo.com. You can also join the Motor Trade Radio, LinkedIn and Facebook groups, or follow the podcast on Twitter. You've been listening to the Motor Trade Radio podcast, bringing you all the chatter that matters.